Thank you very much. Thanks so much for the organizers for inviting me all the way from Chicago. So I guess I want to just sort of say that I too am not sure that I quite fit on this panel, but you'll hear why in a second. But I'm very happy to be here, and I guess just to sort of explain, so I work at the Federal Reserve Bank of Chicago, so it's part of the Federal Reserve System of the United States. And every Federal Reserve Bank, this is a little known fact, has a community development department. So in addition to like the monetary policy and the stuff that like everybody knows that the Federal Reserve does, the Fed also has this community development function where we interact with community organizations in each of our districts, and we focus on how marginal populations use the financial system and are part of the economy. So how low and moderate income residents and how people in low and moderate income neighborhoods use the financial system. Either have bank accounts, get mortgages, small businesses, et cetera. So that's the department that I work in, and that's the perspective that I'm coming from, as opposed to sort of the big stuff that you're probably aware that the Fed does. And our department had been looking at, or has been looking at, minority small business ownership. So that's what I'm going to speak about today, and minority meaning non-white. So racial and ethnic minorities. So we're really interested in the fair access to credit for small businesses and minority small businesses. So that's the point of departure for me here. So I'm going to start my, my talk here with kind of like, I'm going to create like a straw man. So like I'm going to go through these slides pretty quickly because it's kind of not exactly what I just explained what I'm interested in. But I think the question of, I took my task very literally when the question was asked, when I was selected to be part of this panel and thinking about policy and regulations and government and governance. And I was thinking, okay, so what kind of policies do small businesses need? What can I recommend to you all? And given my focus on minorities, my real question is, do minority-owned businesses need the same interventions as non-minority-owned small businesses? And in order to answer that question, we're going to sort of look at the data that we have available and some of the work that we've been doing. But the straw man is, let's look at sort of the big picture, and we'll see what, suggest from the big picture, and then we can contrast that to minority-owned businesses. So the big picture is, I'm just showing you sort of like very, broad trends in self-employment in the United States. And I think that even understanding kind of the data of the big picture is confusing because, different sources of data tell you sort of different, different pieces of information. So for example, just even on this slide, I'm showing you sort of the right and left of kind of two different trends which would recommend something kind of different. And one on the left-hand side, we're looking at, this is the US Census, and it's asking, this is the current population survey, and it's looking at self-employment trends. And you look at that dark line, and it looks like looks like it's going down, and then the dotted line is kind of consistent. But broadly, if I put those together, the line would be going down, and the dark line, the thick line, is unincorporated business owners, and the dotted line is incorporated business owners, and most are unincorporated. So you'd say, oh, there is declining self-employment in the United States. If you look at the other slide, that is showing Schedule C filers, which is a tax form that you'd file if you were a sole proprietor, and that is not going down, that's going up. And that includes everybody in like the gig economy. That's like even like the Uber drivers. So the question is, what do we really understand even from kind of the big picture? Are self-employment trends going down, or are they going up? Similarly, if we look at business starts, on the left side is the Kauffman Foundation in the United States. They do a lot of work on entrepreneurship, and these are new entrepreneurs, and it looks pretty consistent. There's like 330 people out of every 100,000 that are starting businesses. If you look on the startup rate according to the census, business dynamic statistics, firm starts are going down. This is the rate, the numerator is businesses under a year old, and the denominator is all businesses, so business starts are going down. And that seems to be kind of a story that, if you sort of thought about what's going on, what kind of recommendations we need for entrepreneurs, the BDS data, that start rate of going down, seems to be kind of really the main current of conversation, which is that there's a decline in business dynamism in the United States, and that's what has to be addressed. Similarly, if you're looking at the big picture data, this is something that we just heard about in the previous session, that metro areas differ greatly in how many businesses are being created. So this is kind of another big picture question to address, that smaller metropolitan areas, particularly in the Rust Belt areas, industrial cities, there's a decline in business formation in those places, and so the wealth, or sort of the distribution of business growth, is very uneven. It's more uneven after the financial crisis since 2009 than before. So that would be like another kind of big picture question. Here are some survey results from the National Federation of Independent Business Owners. I said federal, it should be federation. And these are small business people. They're asked every month, how do you feel about what's going on in business, generally? And then these trends are tracked. And if you look at this data, this is just the sales data that I pulled and the earnings. So you can see that basically small business owners in the United States think things are going pretty well in terms of the big picture, in terms of their sales are up, their earnings are up. So that's that picture we get. I'm just giving you sort of like, how you sort of understand what the real issues are that small businesses kind of want broadly. I'm throwing at you sort of all different kind of sources of data. This would be looking at the financing picture. On the left-hand side is annual small business loans as captured by community reinvestment, CRA data. Annually, we have about $240 billion going to small businesses with revenues under $1 million per year. That's the definition that this is using. And there's been decline in small business lending, so that's a potential issue. There's been a consolidation within the financial sector in the United States of small banks declining. They're being bought by large banks or merging with larger banks. The share of small business lending from smaller banks is declining, and that can be an issue in terms of the financing picture. And then we can get to the survey data, and what do people say, what do the small business owners say they actually think is a need and that they want to have addressed? And if you go to sort of mainstream small businesses, the answers that people are giving, this is kind of the most current data, is that there's a shortage of labor. People need qualified workers. They're not able to get people to work for them that they think are good people. That's the main thing that's coming out right now. And then there's the perennial issues that small business owners would tell you, which is there's too much regulation and taxes are too high. So again, if you're thinking about what are the sort of public sector strategies for supporting small businesses, small business owners will tell you it's the regulations and the taxes that we don't need. And again, other sources, this is from the Kauffman Foundation, that's weighting young businesses more heavily here. And they're also saying something kind of similar, which is that the government doesn't support me enough in my small business. That's for the younger businesses. The ones that are slightly older also kind of saying we want less regulation and we want less taxes. So there's not a lot of sense that the government has a lot to do to support businesses, according to what business owners are saying. So if we kind of look at that data, again, this is my straw man, and we say, okay, what do we gain from all of that? If the issue is, business dynamism, then there's a bunch of recommendations that we could kind of go through about, how to improve dynamism, relating to population growth, relating to, encouraging a more friendly small business environment, having to do with sort of updating antitrust rules, encouraging more research and development, broadband access. So there's a bunch of, interventions that could support small businesses kind of generally. Obviously they talk about regulations in the survey, and there's this issue with consolidation of the banking sector. I just pulled this slide kind of randomly. This was from the World Bank Ease of Doing Business, because this was my first OECD conference, and I wasn't sure sort of like how multilateral, like, you know, everybody thinks. And you know, it just was like, I just thought that was kind of interesting, because this just kind of confirms this idea of, if you think about, like, these are all these measures that the World Bank is posing to ask, you know, how does any given country rank in terms of its if it's, you know, ease of doing business. And, you know, these really are all about regulations and taxes. So, like, if the business, you know, paradigm is, I want to, you know, be able to run my business, this is, I guess, the way that, you know, you'd be thinking about how to create, you know, an ease of business environment. Well, if now we're going to sort of turn the page and we think about, are these the same things that the minority, the racial and ethnic minority business owner wants? And my focus is going to be most of the work that we've done in the Chicago area and in our district of the 7th District of the Federal Reserve. So here, what we're looking at is kind of a little bit of a different trend in terms of business starts. So rather than seeing sort of a decline and sort of a question about whether there's dynamism, if that's the takeaway from the other data, here we see that there is actually a lot of interest and activity and growth of business starts among minority business owners, particularly in Hispanic and Latino business owners in the United States. They have the highest rates of growth at 500 per 100,000, but even among Asian, and even most recently among African American business owners, the rates are similar to white-owned businesses. And the share of entrepreneurs, we can kind of see that dynamism translating into the share of entrepreneurs over the last 20 years or so, where the share of, for example, black entrepreneurs has gone from about 8% to about 12% of the total, and Latino entrepreneurs have gone from about 10% to about 24% of the total, and the share of white business owners has declined from about 77% to 55%. So there's a lot of entrepreneurial enthusiasm among ethnic and racial minorities. When we look at age of businesses by these categories, reflecting this, what we see, I sort of circled this as for the black business owners particularly, you can see is that racial and ethnic businesses are younger than white-owned businesses. And so you can see, you know, 20%, and I'm reading down in columns here, 20% of black-owned businesses are less than 2 years old, and about a quarter of them are more than 16 years old. And that's really a contrast to the white-owned businesses, where you can see more than 40% are over 16 years old. And so there's a question about, you know, what are the prospects, what are the opportunities for maturation and sustainability among minority business owners, because so many businesses are younger. So here I'm going to sort of run through what I think are kind of sort of indicators of what the issues are and the prospects are, because that'll help us point to what some of the responses and interventions could be. So one of the issues is that minority-owned businesses, particularly black-owned businesses, are less profitable. So in answer to survey, did you have profits, did you have losses? More black-owned businesses say they had losses, fewer say they had profits. The slide on the right is specifically for the Chicago metro area, and that broke down revenues by different sector. And we can see that overall, average minority-owned businesses had revenues about half of white-owned businesses, and had fewer revenues in every sector except for construction and retail. So basically there's an issue here. So we're pointing out that there's less revenue and less profitability on minority-owned businesses. That's going to be an issue. If we look at industry concentration, so maybe business owners are in sort of less profitable businesses. In fact, they are. There's a higher concentration of minority-owned businesses. I'm reading now across here. In education and healthcare and social assistance. So a higher preponderance of minority-owned businesses are in lower revenue industries. So industry sorting is going to be an issue here. If we're kind of now bringing in place as well as that, we can see that this is based on a different data set. This is working with my colleague, Maud Toussaint-Comeau, and we looked at businesses in 5 cities, Atlanta, Baltimore, Chicago, Houston, and Los Angeles, and we had geographic information about each of those businesses so we could sort between low and moderate income and higher income areas, and we can see lower revenues in low and moderate income areas, and we can see lower revenues in predominantly minority places. I only have a few more minutes, so I'm going to have to really go. All right, so we also see, kind of making the point about place, we can see that establishment growth is higher in places that have better housing, lower vacancy rates, more education, lower poverty, higher employment. So business establishment growth is also differentiated by the place that the businesses are located. This data is kind of interesting. It's from JP Morgan Chase, like the bank, and they write reports, maybe some of you are familiar with this, they write reports on looking at all their customers because they're such a huge bank, and they look at where all the credit card data, receipts are showing where people actually purchase their items, and they can go drill down super micro in a city, and this is, for example, for Chicago, and you can see that on the south side of Chicago, which is predominantly black, people travel much farther to do their shopping than in their neighborhood. They go like 5 miles to do their shopping, where if you live on the predominantly white north side, you're going like a mile at most to do your shopping. So there's like an out-migration of dollars from your community, depending on the ethnic and racial makeup of the community. All right, so getting on to the financial side of things. So I'm going to go, I guess I have to go quickly here, but the points I want to make with the next few slides are that capital access is very different for minority-owned businesses, minority owners, than it is for white owners. And this may be familiar to everybody here, but sort of the big picture I'm showing you here is most people don't use a bank to get financing for their business. They finance it with their own savings, okay? So that's like 70%. And if you do use, so here's the interesting thing. So black owners, this is really hard to see on this side, but black owners, 75% are financing with their own money compared to 55% overall. So more black owners are financing with their own funds as compared to going to get debt. But black owners and minorities have less wealth than white owners. So you need more of your own money, of which you have less, to finance your business. And so you may be familiar with, these are the big issues, right, that we were talking about earlier, but like median wealth for a black-owned business owner, or for a black family is $17,000 compared to $171,000 for white-owned businesses. Okay, I'm really rushing here. So there's higher bank denial rates for minorities than for white people. So again, you're using more of your own money, and when you do go to a bank, you're more likely to be denied a loan. Okay, and now what do business owners say that they want if you're a minority owner? So we saw what the mainstream businesses want. They want, less taxes, less regulations. What do minorities want? They're answering a little bit differently. I mean, this is for Chicago, but they want access to funding. They want contract opportunities with, government contracts, and they want to manage their cash flow. So it just recommends a whole different set of policies than compared to the mainstream, which you would want to think about if you were working with specifically minority-owned businesses. So I tried to sort of sort out what would be like public interventions and private interventions, and I don't see that much on the public side that's very specific in terms of what's got a lot of currency right now. So again, going really quickly, what's happens to be having a lot of currency right now is this BSO service layer, which is just business services organization. So there's a lot of interest around the intermediaries that are helping small business and highlighting what they're doing. And a lot of them are working with figuring out what is financial health and helping business owners figure out what financial health is, so that, there you go, so that when most minority business owners say, why did I get denied credit? It was because I had a bad credit score, because I got dinged and the bank wouldn't give me money because I didn't qualify. These business services organizations are working with small business owners to figure out their financial health to improve their credit score. So that's kind of one intervention. Another intervention having to do with business services organizations is kind of trying to make people fit into a kind of an ecosystem so there's easier for a business owner to kind of navigate a system. And that's kind of a place-based way of thinking about complementarity of services and ease of access. So that's kind of been another big area of intervention. With respect to this big question about access to credit, well, what are you going to do about that? So some people say, well, maybe online lenders, financial technology, maybe that's the answer. Maybe that would be the way for minority businesses to get access. And this survey that we've done recently from the Federal Reserve shows that, in fact, minority business owners are more likely than white business owners to apply for online credit, and they're more likely to be denied as well. So it's not maybe the answer, maybe one new source of capital for people, but that's not going to be a silver bullet. And then here I've just written some very kind of niche funds. People say, oh, in Chicago, there's going to be Entrepreneurs of Color Fund. There's going to be, Chase has stepped up, and they have their fund for minority business owners. And I just put the numbers on here because you think about what the banks are doing, as a banking system, $270 billion in lending, and then you've got, Chase coming up and offering $4 million. That's just not going to be ultimately an answer for people. All right, so I'm wrapping it up. I think that one answer is going to be social capital, which picking up on the fact that many minorities who apply for business loans are discouraged, or maybe don't even want to apply because they think they're not going to get approved. And there's a lot of discouragement and dissatisfaction even for minority business owners that have applied for lending. So I think the social capital piece, I think, is a really important piece in terms of establishing networks within financial institutions so that somehow overcoming the discrepancy in denial rates for minority-owned businesses may be something that's sort of going to be answered by social capital. It's not clear why those denial rates continue, even when you when you control for business size and business risk and other factors. So social capital, I think, is important. And I think the last thing that is important is strengthening neighborhood assets. So this is based on work that we're doing at the Chicago Fed, which is correlating factors of neighborhood characteristics with business performance. So these are just correlations, this is just representing correlations. So the farther out the blue and the orange line are, sort of the higher correlated, and the closer in, the less correlated, or the more negative correlation, I should say. So the more positive is the farther out. And what we're seeing here is characteristics of neighborhoods certain characteristics are positively correlated with neighborhoods. So we can actually see that business density is positively correlated with high minority neighborhoods. That is, there is a proclivity for high minority neighborhoods to engender self-employment, which is what we saw. But there's also a negative correlation with higher unemployment, lower labor force participation, lower rates of population growth. So the way that I want to finish this all is to say that whereas, I wasn't sort of trumpeting all of the public sector interventions that may be useful for minority small businesses, but in fact, I think the most important thing for minority small businesses have to do with understanding holistic change in neighborhoods, and that's education, and that's assets in neighborhoods, and that's employment opportunities in neighborhoods, and that is something that the public sector should make an investment in. Thank you.